access to the petty cash. Okay? So Chris, if you got the petty cash and people come to you and you handle that, that's fine. But you can't give it to Jose. Either Jose have his own during lunch hour, or you have that.
Right.
Because what's gonna happen is it's gonna come up, some money will come up short, and they're gonna say, Jose or Chris, you the one that came up short. And usually, as Alex said, in most companies, when you come up short, they take it out of your check, right? All right. Then the third one talks about violating the proper application of technology control. You need to take that vacuum home off every night, because if it catches till fire, what happened? All the data gone. Now we have what they call virtual office, so we can use a virtual office and upload it to a off-site somewhere in the space, and we have that. But again, we need to make sure we got controls for our technology. In my company, I do have take backup. I hate to say it, I'm just like this. I leave it on the premises every night. The Mighty D.
Good morning.
Good morning, sir. How you doing?
Fine.
All right. All right, we're going on homework. Let's pull this out. Let me check the homework and get credit for that. Okay? So, we should take that and make sure we take it off premise. And people get, and that's why I say, Chris, with technology, nowadays, we ain't got to take it off site. We just upload it to the iCloud, and it's good. Okay? Then the third one is reviewing employees. People do lie about how much work they do. So we do have to every now and then regularly independent review the work of our employees by hiring some outside consultant to review internal control employee work needs to be implemented. Like for example, actual example is some it used to be you sign in when you get your business. Now you clock in.
I still sign in.
You still sign in? Well, in my office you got a card and they got to zap that card. And then two, some people say, look here, zap my card in the desk. I'm gonna be a little late. Go ahead and bring me in. And they got something now because people will circumvent any internal control. Now they say use your thumbprint. Now, unless you cut off Chris' thumb, you ain't gonna be able to clock in for Chris. Yeah, I'm gonna leave this thumb here so in case y'all need to do that. Like, why the thumb ain't gonna be no good because it's gonna be smelling. Okay. All right, then we violate the one. We want to make sure that we always got insurance on the assets because people do steal, and a lot of times when people steal stuff, that's what can happen on that. Okay. And then two, you got to be bonded. People will steal your stuff, so it's important that you make sure you bond it. Okay. D, you got your homework?
Yeah.
So those are the four things we talking about, okay? You should add a little answer to that. Good to see you, Mr. Craig. You been missing. I hope you're feeling better.
Yes, sir.
Okay.
I got my doctor's slip also
Okay.
at the class.
Okay, great. All right, then you got those. Yeah, look like y'all missing off on something. Okay, that's majority of the credit. I give you credit on that. So you cover that, and all right. Any questions on those? Those are just categories and narratives, so we should have that. And then A2A was real simple. What we have to do is establish petty cash. That's just a draw entry, right, Chris? Petty cash, debited, cash credited. We take the cash out of the bank account and actually have a little box or something with the money in there. And we usually got a little voucher system. Every time we go spend something, we'll write on there what it's for, and you get the receipt, and you keep up with that. Once you get enough receipts, so your money get low. So in this case here, we don't have much money left. Well, it should have been what's that? $11.15. Okay? But we didn't have that. We were short. No, I'm sorry, we was over. You can always tell it's over, Chris, because it's on the credit side. That means that's revenue. That's the revenue. If it's on this side, that's expense. That's how we can tell the difference. So in this case, we had janitorial 78, miscellaneous 63.68, postage expense 43.50, advertising 47.15. And when we do all that, we have a overage, $3.48. So we recognize that, show that there's a cash over short, and we show that the income statement as a revenue item. Then we realized that $250 is not enough, Mr. Craig, so we bump it up to $200 more, so now petty cash is $450. So again, I think you'll see on the test, what are the 3 reasons we have a credit balance to the petty cash? That's when we're closing it, or lower it, and we debit it when we increase it. Other than that, we keep it the same, okay? Then on the 31st, we spend more money, so we turn that in to reimburse petty cash. And there's no rhyme or reason when you reimburse. Obviously, you don't want to run out of money, D. But if that's the case, you want to make that happen. So in this case, we got the journal entries, which are all expenses. In this case here, we $30 short now. Somehow somebody couldn't add or couldn't subtract, but we $30 short. So usually if it's $30, somebody done stole some money. Okay. And if you can't count, or you're not giving enough money back, or you're taking some money out, you need to get another petty cash person. And then here we realize that we don't really need that much petty cash, so we drop it back down to $50. Here again, Ms. Dawson tells us that there's one of the times we credit the petty cash, either to lower it or close it out. If we debit it, we want to either establish it or increase it. Okay. Any questions on that? And they saying too that the 2 entries of May 31st could be combined. But I like to see them divided because you can see there's 2 different transactions. Okay. And then it talks about part 2, which is just analysis. If 31st replaced not made, no entry reported, then the severance payment will not be recognized for net income increase. So again, this does have an effect on the balance sheet. I'm sorry, the income statement. And the income statement always tied into the equity, which is the balance sheet D. Okay. Then we reestablished petty cash on 8/3, and they asked us to do a petty cash payment summary. And all this is just the petty cash in some format. So what they did is they showed the different payments, and then if it's more than 2 components, they show the breakdown of those 2 components. You can let figure out. Add it all up, it's 274. But these are just the journal entries that we would do. So we would have delivery expense $18, mileage $58, postage $73.95, merchandise, inventory, transportation in. And we do that because perpetual inventory system says we record any expense to get the product ready for sale that merchandise inventory, and then office supplies expense is 87. And so we do that, and then we come back and see the journal entries, which is the same thing. So I don't know why they make you show that, but that's just accountability and seeing how we came up with that information, okay? And then 2, to reimburse the petty cash. That's how we do that. Okay. And again, the increased petty cash, we got that. And then 848 is our bank reconciliation. Did anybody get that? Get the answer?
No, right?
I did.
No.
What you think you did wrong?
I got it on one side with my.
Okay, now let me tell you a quick trick here, y'all, about doing this. Okay, 2 things that make it easy for you. First of all, they give you the bank statements and the book statement, right?
Right.
So if nothing else, we can get that, correct? And they also give you the adjusted bank balance and the adjusted book balance. That's gonna be the same number, right?
Mm-hmm.
So I call that like a sandwich. You got the top layer of the bread.
Well, they don't give you adjusted balances though.
They didn't. That when the check figure in the book.
They did. Oh well, all right.
Isn't that right? Okay. Well, here's the thing. If they do give it to you, Chris, you know what the top sandwich is? The top piece of bread and the bottom piece of bread.
Right.
And what goes in the middle? The add and addition. Okay. Now, here's what happened on the bank statement side. Okay. Mr. Craig, 2 things we're gonna see on the bank side: deposits in transit and outstanding checks. Okay. Now, every now and then we might have an error. If the error is positive, meaning that we didn't show enough money, it's gonna be added. If it's a case with error, we didn't deduct enough money, we put it on the other side. Okay. So that's what we got on the book side. Any questions on that? And again, deposit in transit. We didn't make this deposit probably on the 30th or 31st, but it didn't make it to the bank because the bank got a cut off, so that's why we added to that. And then these checks was written probably the last day and they ain't clear yet, so we can go ahead and deduct those checks just to get that figure. Okay? So the bank statement balance, top piece of bread, bottom piece of bread, sandwich in between, and the deduction. Okay? And that's how we set it up. Bank statement, the balance, adjusted balance, and deduct. And then I know I'm gonna do something here, something here. And again, if you can get this figure D, this plus this, minus something, give me that, I can solve for that now. Okay? Food for thought. And then the bank balance, same thing. Here's my top piece of bread, here's my bottom piece of bread. I got something in between. I'm gonna add, I'm gonna deduct. Okay? I usually add anytime the bank is collecting some money for me. Now, in most cases, that don't happen in real life. I'll take that back. For me, that's when I get credit cards. I zap the card, Mr. Craig. I don't see it until I get my bank statement, because what's going to happen is they're going to take the money out of the bank. The bank account go put the money in it minus the fees and give me a net figure. Okay. Instead of a note, you may see credit card charges. Does that make sense, everybody?
All right.
All right. And the deduction is everything, and basically everything on the book statement, adjustments. That's because we don't see those, so we get the bank statements, right?
Right.
So all these are things that happen on the bank statement that we now got to put on our books. We didn't know that they pulled some money out till we got the bank statement, so we got to make that adjustment. We didn't know that one of the checks bounced. Now they say in a letter, I take that back. But when we see the bank statement, it says check return. So we got to deduct it out because we put it in the money, so we got to deduct it out. They always go hit it with a bank charge. And then two, we might have an error. If the error means that we didn't take enough money out, we deduct some more. If it says the error said we on paper we look like we did too much, we add it to that. And that's it. Nothing real difficult, but again, just look at it like a sandwich. Top layer, bottom layer. And in between. The meat. Okay? And it's subtract. So if nothing else, you can at least get the format. Top layer, bottom layer, spread, add and deduct, and then fill in the blanks. And you can even use this analogy, Chris. That's parking lots. We know that the things on the bank statements are things that we did on our books that the bank don't know about or has not recorded. Okay, and it's tracked. The things on the book sides are the things that the bank already know about, and they took it out of our account, and then we see the account, we say, oh, I forgot that they took it in note for us. I forgot that I did know that they check balance and so forth. So again, that's how you have to look at it. And that's like being on different sides of the street. If you're on the side of the street here, you're on the bank side. If you're on this side, you're on the book side. And basically, it's telling Mr. Craig, Chris, here's what we did on our books, and here's what the adjustment we got to make on your books. And the same thing. Here, the bank is saying, here's what we did on our books, here's the adjustment you make on your books. So again, look at it as being on either side of the street. And depending on which side of the street it is, you add and subtract on that information. Okay? Nothing but difficult. But you got to do repetition. What I suggest, we will have a test Wednesday over this information. What I suggest is go back over the homework and work at least one of these bank statement problems and make sure you got it down. But use that analogy, okay? And then they asked us too to do the journal entries, which again, the journal entry, Mr. Craig, is everything on the book side. We got to record that note. We got to record that insufficient fund. We got to forward that charge and that error, okay? And then we see that. The note was $9,000, but we only got $8,955 in cash. The bank got a little fee, collection expense. Accounts receivable, we got to put that back on Jay Shaw. We thought he had paid the bill. No, the check came back. Miscellaneous bank service fee, and then the rent. I made a mistake of putting too much, not enough of rent, and so I increased it by $20. I take away my cash.
You go back up.
Yeah. And sometimes what I tell people is when you're doing a problem, highlight the information that's important. Now, every now and then they're going to give you some what? Fluff, right? Take the fluff out and then see what you got.
Question.
Answer.
Where do we record the non-sufficient fund on the adjusting?
We're going to put it on the book side because the bank already know the check came back and they don't want to send it back.
Yeah, I mean.
You record it as miscellaneous expense.
Miscellaneous?
Mm-hmm.
Oh, the bank fee or the what?
The NSF.
No, that's July 31st. That's a show. Here's what they saying, D.
Oh, okay.
Jay Shaw wrote us a check. We recorded